There's been a lot of talk this week about tariffs, retaliatory tariffs and trade wars. Stock market gyrations have wiped trillions from investments and retirement accounts. Are you wondering what all this means? I'm Wright with RFA. Let me explain. What is a tariff? A tariff is a trade on tax. All countries impose tariffs to varying degrees. The importer of goods pays whatever tariff rate applies, and custom revenue goes to the government of the nation where the importer is located. Tariffs can mean higher costs for consumers and businesses. Why are tariffs imposed? Tariffs can be a source of revenue for governments. They can be used to protect important industries and jobs from competition from cheaper imports. Tariffs can also be a tool of foreign policy. One country can use tariffs to punish another for policies or behavior that run counter to its national interest. Why is China the main target of US tariffs? President Trump this week paused tariffs against dozens of countries for 90 days, but escalated the trade war with China by imposing a total tariff of 145% on Chinese exports. That was after Beijing retaliated with increased tariffs on US goods.
China, first row. China, 67%.
What's going on? The US says some of China's trade policies are unfair and there are barriers to US companies operating in China. It's also concerned about intellectual property theft and China's massive trade surplus. The US also has a mixed track record in some of these areas, such as subsidizing farmers. The Trump administration hopes it can force export powerhouse China into concession, but that has risks, because China's purchasing of US Treasury bonds plays a key role in financing the US government. Despite a tense relationship, the situation shows that the US and China are reliant on each other. China's central bank receives a torrent of US dollars from the country's exports to the US and then parks those dollars in US government bonds. That US borrowing, often criticized as unsustainable, helps pay for programs that are important to Americans, such as Social Security. What are the deep trends at work? The world economy has been organized around the principle that free trade boosts economic growth and prosperity overall. The rapid increase in living standards for hundreds of millions of Chinese from poverty in the 1970s is cited as proof of that theory. In the US, manufacturing has declined as a share of the economy since the 1990s. Many Americans benefited from cheaper goods such as furniture, clothing, and iPhones manufactured in China and elsewhere in Asia, but at the cost of other Americans losing stable factory jobs. It was the US that paved the way for China's entry into the world economy. President Nixon established diplomatic relations in 1972, ending Beijing's quarter-century of isolation. The Make America Great Again moment in US politics is one of the long-range reverberations of those seismic changes. Want to stay current on tariffs and the trade war between the US and China? Be sure to like and follow RFA for more.